Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, January 21st. We've got some interesting news this morning that came into the U.S. markets actually Tuesday night, Asian time, Wednesday morning, New York time, and that is that the People's Bank of China, China's Central Reserve Bank, its Federal Reserve, so to speak, has issued an order to the large banks in China to substantially slow their lending that's occurring right now. Now, China's banks have been lending quite dramatically, helping the global economy recover. In 2009, loan growth in China by the banks and the banking system there was up about 95%. But in the first 2 weeks of January this year, just the last 2 weeks, Chinese banks lent some 161 billion, which is another record pace, and if annualized would be 50% growth over last year's lending at least. Now, there are a lot of rumors circulating whether or not the People's Bank of China actually told the banks to stop lending or just to slow it down a bit. We do know that they raised bank reserve requirements on some of the larger banks, the second effective interest rate hike, by raising reserve requirements in about a month or 3 weeks, that is. And we're seeing some selling in the markets this morning, hitting the commodities markets and selling of foreign currencies and buying of the US dollar as a result. My view, Beijing, they're not dummies. They are more than willing to come out and tell banks what to do, and banks largely listen. So if they feel that the banks are a little too aggressive here, I'm not surprised to see Beijing come out and say, hey, cool it, guys, and the banks to listen. I do not believe as many bears out there on natural resources and bears on the Chinese market believe that this is going to precipitate a major setback in the Chinese markets, in the Chinese economy, or derail anything major that's happening around the world as far as a recovery goes. We've seen this many times before in China, and their economy is just simply too strong and too healthy and has too many things going right for it to see the kind of setback that a lot of bears are calling for. However, this is causing a little bit of a setback in the market, so I want to get right to the charts for you. Let's take a look at the gold chart. This is the same chart we've been following for you for some time. Last week, gold had climbed up to the upper boundary of this channel here, and it's since come down a little bit. This is the action today since China mentioned that it wanted to curtail lending a little bit more. We're seeing gold down about $10. Gold is in a sideways trend here. We might, as I noted in past videos, pull back to the 1060 area again, but there is no change, no major trend change in the intermediate or long-term trend for gold, which remains substantially higher in the months and years ahead. So don't be shaken out of your core positions. Let's now take a look at the dollar index. Last week, the dollar looked like it was about to fall apart, but with the last few days of trading, and especially the news out of China, the dollar has spiked higher. That to me is a short covering, and also fear that China's economy will slow down dramatically, which are fears that are overblown in my opinion. The dollar index might be able to get up to 79 again, perhaps take out this high a little bit, get up to 79.50, but that's about it. The dollar remains in a very steep, very strong long-term bear market. Let's take a look at the Dow now. The Dow, as you know from my videos, I've been looking for 10,800 on the Dow. I thought we'd get there by the end of the year. We didn't quite make it. We got up to about 10,650 in the first Several trading days of this year, we ran up a little bit higher, then we came down. The Dow is holding very, very nicely in here. I still believe it can get up to the 10,800 level, which is now only about 85 points away. And if it closes above that, we could see a short-term cycle inversion, which I'll explain in another update perhaps next week for you. And we could see the Dow get up to 11.6. It's a little too early to say, but we do have to keep our eyes on the Dow here, because short-term cycles say we could go higher, intermediate-term cycles say we could start to turn lower. So we're reaching an inflection point in the Dow, and I want you to stay alert to my signals there, and I will keep you fully posted. Please stay informed by way of the UWD daily columns, my Monday column and my colleagues' columns, and also my Real Wealth Report. The January issue goes to press this week, and by way of these videos. Till next week, this is Larry.